Yeah, let's talk about the Fed and Bitcoin. So it looks like the Fed's minutes from a December meeting have caused Bitcoin to crash quite a bit. There's about $800 million worth of cascading liquidations yesterday after Bitcoin broke south to about $43,000 per coin. The rest of the cryptocurrency industry also followed suit, which is pretty typical. Bitcoin kind of leads the pack in terms of price for all the coins out there. The news from the Fed was that they're looking at tapering and kind of changing how they are addressing the current macroeconomic issues out there. And it's kind of spooked the market, hawkish, as people say. If the Fed starts tapering and starts changing interest rates and putting them back up, that could mean that high-risk assets like Bitcoin and tech stocks could start tumbling a little bit because people are going to move out of those assets into longer-term assets that are maybe a little bit more stable. Naomi, I'll throw this over to you, though. Pretty sour note to begin the year, but it does kind of help that Bitcoin is kind of trading based off of what the Fed is doing because it's supposed to be an inflation asset.
Yeah, no, it's interesting. The notes from the minutes that were released don't look good at all. So as you said, the market is reacting to Fed notes, and the Federal Reserve, it seems, are quite spooked by inflation. And so from an organization that generally is very stoic when it comes to this issue, it's like, oh, it's transitory, and no, let's not talk about it. It's not really an issue. And now they're like, oh, let's change our whole path, let's start tapering, let's raise interest rates, and now the market's gone, oh, okay, that's not good, because we know how quickly inflation can get out of control. It's one thing to pretend that you have control over monetary markets, to pretend that you put like price fixes on things, but money essentially is a network effect, and it relies on other people being willing to accept that money and considering it as having the same value that you do. So once people perceive that value is diminishing, things can really escalate quickly. So what they've said is they said inflation readings had been higher and were more persistent and widespread than previously anticipated. They said it may become warranted to increase the federal funds rate sooner or at a faster pace than participants had earlier anticipated. Markets have reacted, and it's interesting to see how people are couching this, the language they're using. You had one person say, overall, I think the global markets have shown weakness in light of the recent Fed moves to raise interest rates. Hence, I do think that the drop yesterday is quite correlated. It's interesting that people are phrasing this in terms of like the markets have shown weakness. The markets, I mean, if you're considering strength being just the Federal Reserve, like injecting them with all of this printed cash, I'm not sure that's a sign of strength, which is why we should always take with a grain of salt this all-time high S&P numbers. It's like, yeah, that's what happens when the Fed just keeps printing a bunch of money. There's so much easy capital out at the moment. Banks are loading out all kinds of capital. It's just moving around, sloshing around so much. So I don't think that's a sign of a healthy economy at all. And I think we need to differentiate between stock markets and how the underlying economy is actually doing. But Zach, I think I saw your hand go up, so I'll throw it to you.
It's interesting to me just to see Bitcoin live and die by the money printer, right? Money printer go burr was kind of the meme that propelled Bitcoin over the course of 2021 as an antidote, again, to some of this rampant money printing. And yet, at the prospect of the money printer being shut off, Bitcoin takes a major tumble. So I don't know. It's interesting to see this. One would suspect that maybe these inflation fears would cause what many see as a hedge against inflation to actually rise in value, but actually it's just behaving like any other risk asset. So it's interesting to see, again, Bitcoin sort of like rise and fall with other stuff that it may ultimately be an antidote for. But I don't know, just curious to me that the inflation narrative around Bitcoin isn't showing much strength these days, even when there's inflation concerns being voiced by the Fed. But I'll toss it back to Naomi and let her jump in, and then we'll get Jen down here.
Yeah, I think the main takeaway from this, I think it's moving exactly in line with how we would suspect. It's an on-risk asset. It is being used as an inflation hedge, but stocks, all asset classes are really used as inflation hedges. The reason why this is all tumbling right now is because the bigger takeaway here isn't, okay, this is a fear of inflation. This is like, okay, the Fed is drastically going to be changing its monetary policy. They're going to be stopping that easy capital. Now, the reason the markets go crazy when the Fed's like, we're printing money is because they're like, great, great. We know where that money is going to be going. It's going to be going into the stock market, into housing, it's going to be going to cryptocurrency. And so as soon as they announce, like, okay, we're going to be slowing down this money printing, we realize there's going to be a drying up of some of this fund. So people are anticipating that and pulling back there. We also realize there's going to become a credit crunch. So when businesses have less access to capital and there's growth and all this, people start to become more conservative. They start pulling money out of assets which traditionally they were trying to, increase their profits on, trying to preserve some of their money. So they're going to be pulling it out of their most liquid assets. That's going to be cryptocurrency, it's going to be stocks, etc. So it makes a lot of sense in light of that this is how the market is reacting. And it makes a lot of sense that crypto is kind of following a stock market model of how it's reacting to Fed policies. Now, whether or not Bitcoin is actually an inflation hedge, I mean, it's incredibly volatile to be an inflation hedge, and people have pushed back against it because of that. But I still think that, it's just another asset class that allows you to diversify. There's no such thing as like it's going to save you from inflation asset. There are all kinds of assets out there that some are more volatile than others. And so I think diversification is really the key if you're thinking about hedging against inflation right now. But I'll throw it to you, Jen.
Yeah, it's always interesting and a little funny to me when there's a sea of red, all the newcomers to the space start panicking. I was on a call yesterday that was not a call with someone who I usually discuss crypto with, and he showed me his portfolio and he was like, what do I do about this, Jen? Like, oh my God, look at the markets. And I think it's always just, and I don't know why they're asking me, like I control the markets. I have no idea what they should do about that.
No?
Yeah, I don't. Yeah, I know, surprise. And so it's just interesting to me for the people who are just getting into the space when they have to face this. It's just, another reminder that you should really understand what you're getting into and understand how the markets change. Naomi, I have a quick question for you before we move on, though. Yesterday, I saw a bunch of TikToks where I get my news, that we're pointing towards the consumer price index meeting that's coming up on January 12th. And they were comparing it to the last consumer price index meeting, which was in November. We've seen like a steady trend in Bitcoin kind of going down since that meeting. And so does that have any weight to you? Like, should we, in your opinion, expect the price to react to the consumer price index meeting on January 12th?
In a rational market, probably not. I think that the consumer price index is largely bollocks. They do all kinds of, acrobatics when it comes to calculating how much inflation there is. I mean, inflation, when it's defined by the Austrian school, is inflation of the money supply. Let's actually look at how much money printing there's been. Consumer price index tries to gauge how much does that affect rising costs throughout the economy. Now, they actually changed the metrics for how they calculated that. I think it was in the 80s after we had all that hyperinflation. Then they're like, oh, let's take out these things which kind of skew all of that upwards. According to the consumer price index, by the way they used to calculate it, we're in double-digit inflation right now. So I really don't count the CPI as a reliable method of judging things. In our society, we should be seeing, by all accounts, deflationary prices simply because technology is getting better, and so it should be leading to things becoming cheaper to produce, cheaper to buy. That's just not what we see. So CPI is super crazy and opaque with how they calculate these things. I don't give it much credit, but the market probably, to answer your question, Jen, almost surely is going to react either way to whatever the news is.